Increasing volatility. Hello and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. Okay, today looking at the markets, we're going to take a look at what's happening in the stock market, and there we have a situation where the VIX, the volatility index, is spiking, and it's spiking because of supposed global uncertainty in the wake of some remarks made by President Trump. So we're going to take a look at how the markets are reacting and the levels we need to keep an eye out on. We're also going to take a look at five stocks that are doing very well. They are making money for investors right now, and we'll analyze those five stocks. And I received a number of questions that I will answer in this edition of the show. So let's get started. The S&P 500 is down 6 or 0.28%. The Nasdaq is down 35 or 0.56%, and the Dow is down 73.33%. The pundits have stated that the reason for the slight decline, it started really yesterday after the market made an intraday high. This is an hourly chart of the market. S&P 500 yesterday rallied to new highs. This was an all-time high, and then the market quickly turned around on President Trump's remarks about North Korea. And the market has followed through with some downward price action this morning or today. So what we're looking at is a situation where we have been range bound over last couple of sessions, actually from the last week in July up until now. This is the range the market's in. So you see these candlestick patterns. These are called doji candles, and this just means that the market is in a period of indecision, and this could notice the statement could mean that we're at an exhaustion point in the market, and we are, I believe, coupled with a rallying market ever since, well, this up leg started in November. A rallying market. We're currently in August of this new up leg here. This was a dip in November. Yes, we're rallying before, but the market came in, corrected, and then we've been going up ever since November. So I think the market is just looking for a reason to decline and a reason to sell off, a reason for folks to take some profits. So it will be blamed on global crisis, global events, etc. But the fact is that the market is looking for a reason to just correct, and it is very vulnerable right now. I'm not saying it will 100% decline. No one can ever say that, but it is looking very vulnerable at this point in time. And this is a chart of the S&P 500. Looking at the Dow Jones Industrial Average, we see a similar price pattern yesterday, where the market soared to new heights above 22,100, and then we are selling off. We're selling off today, and again, November the market dipped into the 17,000 region, and we are currently at 21,000. So we have put on roughly 4,000, or a little over 4,000 points in this move up, and we're looking. And as I said, the market is just looking for a reason to correct. So it's just time to be cautious with the overall market, and watch your individual stocks carefully, because the market may have a spot of weakness, that doesn't mean the individual stocks will, or the individual stocks in your specific portfolio will pull back. Uh, but it just really means keep an eye out on what's happening at this point in time. We're also seeing a spike in the VIX. That the volatility index, it's up some 13 points, 13 percentage points today, and the VIX essentially is is a fair index, or it's considered a fair index. And when you have a high VIX, it's considered that there's a lot of uncertainty in the market, and it spikes up the VIX. Now the VIX currently is at 1250. Uh, just in to give you some comparison, in July, August, we were in a situation where the VIX was at 50 or just below 55 in July, August of 2015. And this was the spike up in the VIX here. And for even more reference, let's take a look at the monthly chart of the VIX, where in 2008, this was the financial crisis in 2008, where the market spiked all the way. The VIX was almost at 100. So let's just view the VIX in perspective here. We're at 12, and in 2008 financial crisis it was at 100. But it just goes to show that the VIX can rise fairly quickly and suddenly when there is volatility and when there is fear in the markets. Let's take a look at what's happening in the US dollar index. US dollar index today has been flat. The dollar index gained some ground this morning, but we have seen, let's take a look at the hourly chart. We have seen that the index has declined somewhat. So we are currently unchanged on the day in the US dollar index, and we're coming up on a resistance in the 94 level, and I believe that ultimately this market may test the 92 level in the US dollar index. So the dollar is still under some pressure at this point in time, and it has been under pressure all year. Similarly, gold is up this morning. It's blame on the gold because of the global uncertainty. We have a spike up here in gold, trading at 1282, a significant move up in gold. And I am of the view that gold, if we can come out of this consolidation pattern here with gold, consolidation pattern in chart lingo really means the market is in no man's land. The market is looking to break out of this consolidation, and once traders see that this market is breaking out and closing above these resistance areas at 1300, even in the 1450 region, we could see a fairly strong rally in gold. I'm not saying it's going to happen right now, but if we do get a breakout, it will be a very bullish pattern. Trend traders will be on that market. If that happens, they will be looking to take advantage of the move up. So gold is definitely something we're going to keep an eye out on. It's hitting up against fairly strong resistance now in this 1282, 1290 region. So we're just going to see how it reacts to these resistance levels. If you notice, the last couple of times gold was at this level, it declined. This was back in roughly mid-April 2017. Market traded up to close to 1300, then declined again in June. Market came up to 1300, declined, and now we're coming up to it again. So we're going to see if this level acts as resistance again and would send gold back to the downside. That's how we read charts. That's how we pay attention to what's happening with the prices in these markets. Looking at the euro currency, similar situation with dollar index. Market has broken out of a trading range that has lasted over 2 years, and we're seeing some pullback at this point in time. But the mood on the euro remains bullish against the US dollar. Taking a look at the crude oil market, oil again is in a is a it's in a situation of consolidation, just like gold at this point in time. So traders are just really adopting a wait and see approach. And I believe one of the reasons why a lot of these commodity markets are not really showing huge gains at this point in time is because a lot of the money is still in the stock market. And once you have a surging stock market and a trending stock market, it money tends to go to the asset that is trending at this point in time, and that is exactly what is happening. Bigger picture, I believe that the commodity index is bottoming out, and we could see a multi-year rally in commodities. We could, however, see another dip in the value of the commodities. This is the Dow Jones Commodity Index, and before the rally occurs, we could see another move down in the value of the commodity index. And then once that move down takes place, we could see the market try to bottom out. And that's what I'm seeing in commodities. So for the last 8 or so years, S&P 500 has been in a bullish tear. Stocks have been moving upwards, and I believe after when the stock market corrects itself, we could see a move up in assets like gold and commodities. The various different commodities we could see move to the upside, and that is important when you are looking for investments, because a lot of investors just really think stocks is the only game in town, and it is definitely, it will be definitely good for you if you look at the market as operating in cycles. So one period, let's say period A, stocks may be doing well, and then period B, you have commodities doing well, and then period C, you may have bonds doing well, and this is how you allocate your assets. So if stocks aren't doing well, you go over to something else like commodities or the bond market or real estate or whatever. So always be seeking out markets that are trending. Always seek out markets that are performing well. Now, speaking of markets that are performing well, we're going to turn in and to take a look at some stocks. The first stock I want to look at is the Zion Bank Corp, and the symbol is ZION. Zion, like Mount Zion. Okay. Yes, a lot of reggae songs out there speak about Mount Zion. Okay. This is a stock, as you can see, bottomed, took a move down in 2016 and has rallied from $20 up to the $45 level. I highlight this stock because essentially this is a stock, although it has been recovering, this was a stock that in 2008 was at the 85 or just shy of $90. It has recouped some or half of that value, and I believe that the market is facing huge resistance up at this $48 level. But if the market can trade above that $48 level, that would be very good for this stock. And ever since July, when the market dipped back down, this is a stock we have been keeping an eye out on. And in the 22 region, the market just surged all the way up to $48. So this is a stock that is on a bullish trajectory, and it's something to keep an eye out on. If we do close below $40 or $38, I would be looking to exit this market. But at this point in time, the stock remains fairly bullish. TransUnion, that is the other stock that is doing fairly well. And let's take a look at stock debut. Made its debut on the scene in 2016. We had I remember when this came out, it was kind of range bound a little bit, trading roughly between 24 up to 26 or 27. The market took a huge dive, and I remember folks were writing this off to just below 20, and then we have seen a series of higher highs, higher lows, higher highs, higher lows, and the stock is making, or it's very close to its all-time high near $46. So very good stock at this point in time. I will rate this stock a hold. If you are in this stock, I will be holding on to it and riding this wave up, because we could see further gains, especially if the broader market index remains positive. If we do get a sell-off in the broader index, I believe this is a stock that will definitely see a downturn. Okay, let's take a look at Momo. How do you pronounce M-O-M-O? Momo. Okay. Very good stock. Also, let's take a look at the broader history of the stock, and we see that the market is currently trading at 45.34. Market's at 45.34, and it started the year in a dip, and this was a perfect buy signal. Actually, a number of folks, this was a stock that has been on the radar. It formed a very good pattern, and into the new year, this was rated as a buy, and the stock, ever since the buy signal was generated, has surged from 25 up to $45. I would still be holding on to this stock, and it still remains fairly positive at this point in time. So this is definitely a very good stock. And that is one of the points of the show, to highlight profitable market opportunities, to highlight what is working in the markets at this point in time. And there is no indication why you should be selling this at this point in time. Please note, good trading practices require that you invest with stop losses. And this is not just for traders alone. This is for investors. If you have a 401k, if you are in the markets at all, make sure you have exit points under your stocks, because we're in a very volatile time now, and these markets could really collapse, and collapse quickly. Not trying to be or to frighten anyone, but that's just the reality of investing. So this is Momo Inc. Advertising company. Is a very good stock. And the next stock I want to take a look at is educational stock. Trading currently at $80. This was another stock that we received a buy signal in the $45 region in the beginning of the year, and we are currently looking at the market at $80, and very good stock. And as you can see, we're looking at stocks. We're looking at the price action in relation to these stocks. Our investment philosophy does not emphasize looking at price earning ratios and all of these things. We look at where the money is flowing in and out of a stock, and this is in a very good uptrend. and it's close to an all-time high. This is a perfect stock that I like to buy, that I like to look at and hold on to. As most of you know, I don't really day trade. I will hold a position for a couple of months, and the buy signal was generated in the $45 region here, and we have not gotten a signal to exit at this point in time. We'll just continue to hold this and let the market trend in our direction. Final stock that we're going to take a look at is Grubhub, the Grubhub Inc. And the symbol is GRUB. And this is a stock that has a gap to the upside. And this was a question that I received in the emails about about what should you do in a situation like this. The market had a gap up in May and also gapped up in a couple of days ago. Looking at the longer term chart, we see that the market is currently at 55. It is at an all-time high. What should you do in a situation like this? Well, it depends on what side of the market you are on. If you are short this market, or if you're selling this stock, I would immediately get out of that position, because this is in a clear, defined uptrend. Does not make sense to bet against these uptrends, because this stock could surge even further. The question essentially, I will not name the person, but the question essentially was that the person got a stock tip that the stock was going to go down. He listed all the reasons, but the reasons are kind of irrelevant. The stock was going to move down. He shorted the stock at 45 and is currently at 55. What he should do? Well, exit. Accept the loss and exit, because this stock could go from 55 to 65 to 75, and then you'll just be losing a lot of money. So when you're the wrong side of the market for a long time, exit. Get your stops in and exit this market. If you're long this market, I will continue to hold this stock because it's still performing very nicely. Grubhub Inc., a very nice stock. No, we didn't. I didn't receive a buy signal on this particular stock, and one of the reasons was that this gap was just a bit too big and it blew through our buy point. The gap from 35 up to 45, it was too big and it blew through our buy point. But if you're lucky enough to get on this, what you can do is continue to hold. Okay, thank you very much for listening to the Smart Investor Show. Just some announcements. If you have a question for me, you can send it into info@smartinvestorcentral.com. Oh, there's one other question that I received, and it was about Bitcoin. And the person essentially asks, what about trading Bitcoin? Well, I personally don't trade Bitcoin. And Bitcoin is something that is very speculative. It is on a tear from the start of the year. It's up almost 150%, I believe. If you want to get involved in something like Bitcoin, my recommendation is make it a very small part of your portfolio. It is very volatile, and it can move up 150%, and it could be down 50% in a week or two. So it's very volatile, and these highly volatile instruments, I would make a very small part of my portfolio. Do I trade it as in do I day trade it? No, I don't day trade, period. I hate day trading. I believe making money in the markets is getting some good positions and riding them out over a period of months. So I don't really need to be day trading, and that has been successful for me. And that method is successful for the majority of investors, because not everyone has the time to day trade. If you want to day trade, fine, no problem. But one of the constituents of this Smart Investor show is the average investor, the investor who may have a job or have another occupation, and have money in the markets, looking at the markets, and want some guidance as to what to do. Okay. If you like this show, what you could do is subscribe, hit the subscribe button, and click the like button on the channel. That helps support the channel. We're a new channel. It's a new venture here on YouTube. We have had a Smart Investor Central website for a while, but the actual YouTube channel is fairly new. So hit the subscribe button to get notifications as to what's happening in on the channel. We'll also have a number of bonus videos and some more analysis of the markets. So hit that subscribe button. You will be happy you did, and click a like on this video. Thank you very much for listening. My name is Beyond Dale, and I hope you have a wonderful day.